Hello, this is the Trades at US Stocks and futures market preview for Thursday, the 6th of January 2022 and Friday the 7th. As usual, we don't typically do market previews for Fridays, and I don't think we'll do one for tomorrow. But here's a look at the ES front month futures contract. This is the daily chart of the broad market in futures form, and as you can see, what do we have here? Not much. We dipped, came back down finally after Monday, Tuesday being really boring, and by the way, frankly, Wednesday morning being boring, and we finally got some movement. We'll talk about the intraday action in a minute. Let's go through the major charts or indices. So we got the S&P cash down 92.25. By the way, we were one candle away from a 13 sell signal on the S&P cash, but it is what it is. NASDAQ 100, though, had a 13 sell signal. That was the high candle, high close of the year, and rolled over here. So again, that static trend line at 14,000, I mean, we're still another 1,000 points lower on the NASDAQ is the target from that static trend line. If you break that and keep going, it gets ugly, right? SOX down 129.13 off the highs, obviously. Biotech's down 179.26. Now, keep in mind, look at this candle, look at where this is. This is the low of the last year, the biotechs, things that are saving us from COVID. Not all of them, obviously, but this is it. Like they're going to break 2021 lows tomorrow if they dip at all. That's where we're at. The Russell 2000 down 74 points. Again, this thing's been stuck in that dumb range. We're still in the middle of it, but again, right back at the lows. Crude oil down 77 cents to 77.08. Whatever. Upper to mid range at best for the last year. Gold down 16.3. Nothing pretty there. Advanced decline ratio on the NASDAQ. Look at this. Negative 2464. Basically tied for the worst 3 or 4 days of the year, the last 12 months. Not pretty. Advanced decline ratio on the New York, negative 2,100 or 2,099, whatever, that's 2,100. Again, bottom 5 days ever. The NASDAQ volume is 5 billion shares, so volume's okay. Not as strong as the day before, but the day before was also negative for the NASDAQ, even though the broad market was fine. And volume is back to the normal stuff, right? That's just where we're at. Trend closes at 0.7. It's fine. Puts 10-day moving average at 0.95. Now, if I count back, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. I mean, if you get a low reading again, you're going to drop off about a 0.95 number, and then maybe, but we're not going to get to 0.85 yet. We'll see what happens. The VIX closes up $2.82, so the VIX is back on the rise, bouncing right off of that static trend line. It is what it is. Apple up, down $4.78, so $3 trillion, and then not so much is what it is. Amazon down 63.30. This thing's about to crack serious lows. Like, this is getting to the point where it's going to be at the lower end of the realm for the year. Facebook down $12.36. That's fine. Goldman Sachs, sorry, let me do this in order. Google down 132.49, also very ugly. By the way, some of these candles are so ugly, we don't usually, look at the last year here on Google, or 9 months that we show here. When have you had this bad of a candle? So this does not look good. And again, remember what we talked about. Nobody wants to sell stocks that are up, the market's up, closing near the highs in the last month of the year in December. Once January rolls around, if that's how it holds, and it did, very near the highs, now everything's different, right? So any sign of weakness, and what's signs of weakness? I don't know, let's talk about it. Inflation, higher interest rates coming from inflation, the Fed unraveling, everything being overvalued to begin with, right? That's where we're at. So just be aware of that. Goldman Sachs down $8.85. It was actually up earlier in the day. It was up 2 days in a row, and now it's almost given back the last 2 days. Netflix down 23.63. Again, another really ugly candle, right? And remember, 13 sell signal back in October. That's basically the high. The risk line is never broken. Even if you get back to the red static trend line, which is now a dashed line, right? Now we're much lower. So just if you break those types of things, you're in trouble. Peloton down $1.59, right on the risk line again. TLT, the 20-year bond ETF, was down 78 cents. So in other words, bonds lower, rates higher. even though everything else is going on. Tesla down 61.47. Note the 13 sell signal 2 days ago was right on the money, and Zoom down $4.97. So that'll take us to what? That'll take us to new lows on Zoom. Bitcoin are almost there. Bitcoin closes at 3,230. Right? Again, not pretty. Nothing there pretty. Let's see what that red static trend line does, but still, generally speaking, not pretty. All right. In terms of the intraday action, let's look at the 5-minute candles. Again, we're 3 days into the week. So, you know, like you can look at this and go, okay, Monday, start of the new year, small gap up, filled, wiggle, 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 closed where we opened just above it, and then nothing there. Tuesday, gap up, eventually sell off, fill the gap, wiggle, 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 right? And then you end up with what? You end up closing slightly positive on a 13 sell signal, okay? And now here we go to Wednesday, and what happens? Sell off from that 13 sell signal, but basically open flat, filled the gap quickly. It was no big deal. It was dead all day until the end of lunch. Lunch ends, and then everything sells off hard. And by the way, we got 13 buy signal, and we broke the risk line of that very quickly. So nothing about that is pretty, and let's just be aware of what that means for the markets. In terms of economic data that's left for the week here in the U.S., Challenger job cuts at 7:30 a.m. Eastern Time on Thursday. Weekly initial and continuing jobless claims numbers at 8:30, along with the trade balance number. So we're going to be half size on Forex. ISM services PMI number at 10 a.m. Factory orders at 10 a.m. Natty gas at 10:30, and then that's it. You got non-farm employment change and the unemployment rate at 8:30 a.m. Eastern Time, an hour before the bell on Friday. Consumer credit at 3 p.m. Eastern Time. Nothing pretty, but here's the thing at the end of the day. Let's just focus on the fact that, like I said, all in December, nobody wants to sell the market and lock in their tax gains when the market's up for the year, and especially the bigger stocks. But once the end of the year comes around, now they can sell, and then you add to that, what's the Fed doing, right? They're looking at unraveling. They're looking at raising interest rates. There's all sorts of things going on, plus there's still COVID. So nothing positive for the market. It's overvalued to begin with. I'd say look out below, and certainly if you're going to get long, you better have pure market direction intraday on the long side to justify it. Charts as usual brought to you by eSignal. If you've not yet taken a trial of our services, feel free to do so. We will help you out for a couple weeks. Have a great trading Thursday and Friday.